I will start that up, and it should be going. Okay, yeah. All right, so first of all, I guess just want to thank you for coming on today. I really appreciate that. And if you could just tell us a little bit about yourself, I guess how you got into investing, got into YouTube. Alex has a YouTube channel, Blood Phantom 81, and just whatever background you want to share, I guess.
Sure. Yeah. Well, first of all, thanks for having me on the show. It's definitely an honor to be here. I've been watching your videos for a while now. I don't comment on all of them, but definitely like what you're putting out. And I think we have a lot of similarities too, as far as like career and like interests. So that should be pretty interesting. I haven't even made a video probably since like last year. So I haven't even talked about finance for more than like 2 minutes to like anyone. So this is actually kind of interesting. I'm gonna have to like get back into it. But yeah, anyway. So yeah, my name is Alex, and I've been investing since maybe 2018 or so. I want to say 2017 is when I graduated from my bachelor's degree in computer science, and then at that time I got a full time job right after I graduated, and then I started to make like real money because I did have some jobs while I was still an undergrad, like whether I was like a teaching assistant for my computer science classes or whether it was like internship work or like part time software engineering work. I was making some money, but it was just like basically minimum wage. Um, and then, as I mentioned, graduated, so I started making like decent money. So I was like, I better make the most out of this money that I'm getting. Um, and yeah, 2018 was not the first time I started investing. I did, start to understand a little bit about technical analysis while I was actually in college. That was probably one of my biggest passions at the time, aside from basketball. Um, yeah, I played basketball, but not like for the school or anything like that, just like for fun. But anyway, so yeah, I started investing with real money in 2018, and then I think one of my biggest accomplishments, maybe part of the reason I get somewhat views or why I'm like semi popular is because I've been able to grow my account relatively quickly. I basically doubled my account every year since I started investing. So I don't remember exactly how much I started with, but at some point then I had six figures, like 100K portfolio, and then that doubled and that doubled. So now I'm sitting at like close to 500,000 or something like that. And yeah, looking to keep on continuing that trend. We'll see how long it lasts for, but regardless, I'm looking to outsize my portfolio and grow it relatively quickly. So yeah, just a brief overview.
Yeah, so you said you started investing like pretty much once you graduated or had some more money. So is your goal just to like make more money, or did you initially have like longer term goals with that, and do you have sort of more concrete longer term goals with that now?
Definitely. I think growing up, I very much subscribe to this culture of like get as rich as quick as possible so that you can, have power to do things you want. Like as I was growing up, I hated school. I've hated school my entire life, honestly, like even since I was like in elementary school. And school has a lot of parallels to even work. For instance, it's basically being at a place where you have to do something that you don't want to do, and you have to do it in the way that people ask of it. So, for instance, like when you're in school, in elementary school, you have teachers, versus when you're working full time, you basically have a boss. You have to show up for like a certain amount of hours per day. Same thing with like work. So basically, it's like a lot of not being able to do what you want to do, and then obviously wanting to spend more time doing what you do want to do. Sorry, excuse me. Um, so that like I had ambitions to like be able to do more of what I wanted to do. I wasn't sure exactly what it looked like, but I knew that investing could be like an avenue for that. So that's basically why I, wanted to make money.
Okay, that makes sense. Yeah.
Yeah.
So, um, like, I guess, do you think you are trying to just like get enough money just to like quit your job as soon as possible, or just like have the flexibility more so?
Yeah, definitely more of the flexibility. Um, I mean, like, I think whatever I do after I stop working, I'll just like, I don't think I'll ever want to stop growing and learning, but definitely I want to do less of like, hey, show up at this job and do this thing, regardless of how much I like my job or not. So yeah. Sorry, it's kind of a brief answer. I haven't thought about this
Yeah,
stuff
that
in a
makes
while.
sense. Yeah, that makes sense. Like, I feel kind of similarly in the sense that I don't have something like super concrete that I want to do, but the just like freedom or having the like freedom or flexibility and like choices of what you can do rather than saying like, well, if I don't show up to work for this week, or like if I am not super vigilant about going to work every single day, they might not like me anymore, and then I can't pay my bills or whatever. Like, um, just having the flexibility, I guess, and freedom there.
Yeah,
So
definitely. I would say that long term, I definitely want to continue working with the stock market because I feel like that is my passion. I think a lot of people in life haven't really found their passions, to be honest. But for me, the stock market, like I wake up every morning thinking about the stock market. I also go to sleep, and the last thing I think about is the stock market right before I go to sleep. And so, like, for me, the stock market is more than just like this way to get money. It's also this thing I'm really interested in because, like, to be able to make money trading is probably one of the most like fascinating things I can think of, and to be able to make money in the stock market, given how competitive it is, especially as a swing trader. Um, I mean, it's like one of the best feelings, honestly, to like make a really good trade. It's kind of like, yeah, overwhelming, like just very like infectious, I would say. So I think even after like I'm set, as far as like not having to work for a job, I'd still want to be trading.
yeah, so I guess for people who don't know, maybe just like talk a little bit more about how you invest and sort of split up your investments, or you're definitely into a little bit more trading type stuff in general. But
Definitely. Yeah, so I have like a few different strategies. I'd say the core of my strategy is swing trading, and that's basically through my Robinhood account. So maybe like 80% of my money goes to my swing trading account, where I basically use technical analysis to, excuse me, to trade basically like on a weekly or monthly basis. And I basically trade large cap tech stocks mostly, but I'm starting to trade crypto as well. And actually, I'm getting a lot more into crypto, so we could probably talk a little bit about that afterwards. But yeah, I'd say like 80% of my money is there, and then I want to say maybe like another 10% of my money is with like long-term dividend growth. And by dividend growth, I really do mean stocks that increase their dividends year after year, not stocks that pay dividends that happen to grow. Because I know there's sometimes people conflate the two things. And the reason for that is because I do feel like at some point I'm going to start to put a lot more money into my dividend growth accounts. And that's going to eventually fund a huge part of my retirement or like my passive income lifestyle. And then the last 10%, I guess you could call it real estate. Me as a real estate investor, I'm definitely one of the most lazy real estate investors ever. My real estate investing strategy is actually the live in then rent strategy. Um, what that basically means is you purchase a property that you're going to live in. And one of the benefits of purchasing a property to live in it is you don't have to put 20% down payment. That's one of the perks. The other perk is that you actually get a favorable interest rate. Um, and and yeah, also it's like very passive, right? Since you're living in it, you don't have to like manage a tenant, and you can start building equity that way as well. Another advantage is that you can actually renovate the property while you're living there. Another advantage is like before you move on to your next property, you can stay in that property for as long as you need to before moving on to the next property. But the idea is once you acquire a property, then you look for another house to live in. So then you move into the other house and then you rent the old one. And then after a while, you can accumulate like somewhat of a small little, real estate empire. And honestly, that strategy alone, I think like if you start in your early to mid 20s, like most people can like live pretty comfortably by the time they're in their like mid 40s, as long as they look for deals really well. And like you won't have to, think about the stock market very much. I think just over time, real estate presents a lot of benefits. And that's not to say that I prefer real estate over the stock market, because I definitely much prefer the stock market over real estate, especially for the liquidity. Because with the stock market, I can literally like buy and sell, $200,000 worth of a stock like within the same minute, but you can't do that with real estate. So that's basically the main reason. But yeah. Anyway, I'm not trying to be biased towards one over the other. That's actually why I try to list the positives with both. Is because it's kind of closed-minded to think of them as like this versus this. I think most people pick one and then they say the other one sucks. But yeah, I'm all for like, let's figure out the best thing in both worlds. So that's basically how my portfolio is allocated.
Yeah. Okay. Do you you mentioned cryptocurrency? Do you like hold any cryptocurrency like for the long term, quote unquote, or is it mostly like trading there as well?
Yeah, that's a good question. So I think in the crypto world, there's very much like a hodl culture. By hodl, I mean like HODL. Like you just hold on to this thing, and then eventually, in 10 years, it's going to be worth like 100 times more than what you bought it for, like that sort of thing. But the big problem with that is that crypto obviously is like extremely volatile. Like there's stretches where any given coin doesn't really matter. You could suffer like 60, 70, 80, 90% drawdowns. And that's even like the blue chip cryptos have gone through that. And so, but in the other reason why people kind of subscribe to that philosophy is because they say that you can't time the market. Therefore, there's no point in doing anything else besides DCA, which I think is actually pretty kind of like a defeatist attitude. So my crypto strategy is more of like a trend following strategy. And something else we can talk about too is that, in my opinion, with technical analysis, there's two real ways to make money. The first is what I call mean inversion, which is something that I kind of coined myself. And the second is trend following. So I'm using more of like a trend following strategy with crypto, which I could definitely elaborate on if that would be helpful.
Yeah, sure. If you wanted to.
Yeah. So like the great thing about trend following, so this is something that I actually have not. It's not something I discovered. Like I've actually read about this, but the idea is that any kind of stock or asset that's in an uptrend or downtrend, it's hard to know exactly when that uptrend or downtrend is going to actually end, unless you define some parameters for what it means to be in an uptrend or a downtrend. Because like something like crypto, it can take off and like literally go like hundreds or even thousands of percent, like in a given year, and it's impossible to time when the exact top is. But what a trend following strategy would say is like, hey, I don't care about timing the exact top or the exact bottom as long as I get the meat of the move. Basically, as long as I define within my parameters what it means to be in an uptrend and it's still in an uptrend, I'm going to keep on holding this particular asset. And if it breaks that uptrend, then it's no longer an uptrend and I no longer care about it. So it really takes all the emotion out of this, out of trading or investing that a lot of people have, because people tend to fall in love with their coins. Like it doesn't matter what coin it is, you'll have like a pretty big cult following, which is something I always find pretty interesting. But yeah, so that's basically the idea. Oh, and one of the things I'll say too is that how you define the trend can be pretty subjective. So like some people would use a moving average to define an uptrend or a downtrend. Other people would use like a series of higher highs or higher lows to define an uptrend. So different sort of examples of that. But the same applies to the downside. Like if crypto or like Bitcoin, is following 10% like a week or something like that, like I basically want no part of it. That does mean that I'm not going to catch the bottom because I'm not trying to DCA into it until it bottoms, because who knows when or if it'll bottom. But what I'm waiting for is for that downtrend to end. that downtrend is basically a set of parameters that I've decided ahead of time. And so once it's no longer in a downtrend and it resumes an uptrend, then I want to buy Bitcoin, even if it means I'm going to miss the exact bottom. But that's okay, because really the point of the stock market is about, it's way more about protecting what you have than trying to always be invested in something and always trying to make money. That's something I've learned, like definitely the hard way. Like I've had, I've had like a 400k account before, and have it drop to like 300k just because like, I had bad risk tolerance, or bad risk allocation, I should say. And you can have your account grow like significantly, but if it gets wiped out as soon as Bitcoin or any other asset sees like 30% drawdown, then like what's the point? Like you basically just have bragging rights at that point. So yeah, capital preservation is like it's like more than 50% important, because there's always going to be really good opportunities. As long as you have a method for taking advantage of those opportunities, then like the capital preservation should be the main concern, in my opinion, especially if you're buying like a really leveraged asset like crypto, or anything else, like especially call options, for example, which sometimes I buy leaps as well on stocks, because they're like a leveraged way to own a particular asset. But like again, they're already leveraged enough. Like I don't need to always be in them. I only need to be them during the
Yeah.
great opportunities. And the last thing I'll say too is that like, once your account starts to get into like the mid six figures, like every 30% year that you get after that is huge. And that 30%, gain could come in like 2 weeks. So like, especially if you're trading, in volatile assets, it's just like, you don't have to do that much. You don't always have to be in a trade. Um, and like, if you were to put into a compound calculator, like, you take whatever you have, let's say it's 200,000, and then you multiply it by 1.3, meaning you simulate what it would be like to get 30% gains. So you multiply that by 1.3, and then you multiply by 1.3 again, 1.3 again. What you'll start to notice, it'll start to get big, like really quickly. And so, yeah, like you don't need that much is basically the point of what I'm trying to say.
Yeah, that makes sense. So the one thing that you said was something about like um, sort of finding opportunities and not jumping on things just because you want to like be invested, I guess. So
Yeah.
I sort of hear a lot of people saying that, talking about like cash, and I feel myself like thinking as well that like I don't want to be like sitting in cash. So like how do you think about that with in terms of like inflation and sort of having your money like doing something per se?
That's a great question. Yeah. So, I mean, I would say, well, two things. I'll open up with saying, like in the context of like holding cash for like 6 months, like there's really nothing to worry about. If we're talking about like holding cash for a decade, then you messed up somewhere. But in the context of 6 months or 3 months, like it's not that big of a deal, in my opinion. And then let's see, what else was I going to say about that? Oh yeah, the other thing is that like it's a spectrum. Like it depends on what you buy. Like for instance, um, if you're just buying like dividend growth stocks and VOO, like what the hell are you doing holding cash for? Like just buy the things, like they're gonna do all the hard work for you. But if you're buying Bitcoin, like that's when some kind of strategy starts to matter a little bit, because like again, for instance, like VOO in like 2009 probably lost like 48% or something like that. Like maybe in 2000 it lost a little bit more, whereas the Nasdaq probably lost like 80%. So, obviously, even large broad indices could suffer massive drawdowns, but for the most part, these things are going to be in uptrends. And like to be able to like the other thing that happens is like 5 or 6 or 7% drawdowns are so common. Uh, but since the stock market is always in an uptrend, it's really not worth it to be like, oh, I got to time the next 4% drawdown. Like, no, like just hang on to it. But like with how often Bitcoin has large drawdowns, then you have to develop a little bit more of a strategy. But honestly, like if if you don't if someone doesn't have interest in buying risky assets or coming up with a strategy, then yeah, it's okay to do the more simpler and effective thing. The point of a lot of my videos, which I'm starting to realize, is I don't want to dissuade people from just buying the S&P 500 or like some kind of dividend growth ETF. Like that's great. Like continue to do that. Like you don't have to think about it. It's effective. There's so much research that backs it up. Um, and even I myself, like I mentioned, I buy dividend growth stocks. I love dividend growth stocks. I love PPCE, and I'm like a huge fan of him. For instance, I actually met him, which is really cool. But yeah, like it just really depends on the strategy, and of course, it's going to be a spectrum, right? Like the most safe thing you can do is probably buy like a target date fund. Like, oh, I'm going to retire in 2045, so my bonds and stocks allocation is going to be like 80-20, and then every year it'll change. That's like on the extreme end of the spectrum. On the way opposite side of the spectrum, it would be like buying monthly call options, for instance. So like you have to figure out where you
Yeah.
fall within that range.
Yeah, I think that's a really good point as well.
Yeah,
And something like, I guess in general, like in life, I really uh, appreciate when there's like nuance, and I get annoyed when people just try to like say blanket statements about everything.
totally.
Um,
You see that all across YouTube too. It's like
yeah,
there can never be a middle ground, or it's like it's always has to be my side's better than your side. Like it's honestly ridiculous. And like if you never question the gray area, you're never going to learn that hey, there may be something slightly better.
yeah,
Especially when people start to quote those like you know if 80 to 90% of mutual funds can't beat the market, then why can you? You know what I mean? So it's
yeah,
like might as well why even try? That's what they say. I'm not saying that's what they say, but
yeah,
like a lot of those statistics, they have different parameters than we think. Like mutual fund managers have to have a lot more regulations than us individual investors. They have to meet a certain criteria of diversity. They have to meet a certain criteria of like different ratios, like Sharpe ratios, for instance. So for every amount of upside that you have to have like a respective amount of limited downside. You need to hedge yourself sometimes. I mean, not to mention there's fees that you're going to pay all across the board. Like there's so many reasons why certain statistics like that can exist, but it's for a lot of people they just ignore that. And like for me, if I had just invested in VOO, there's so much upside that I would have missed out on and so much learning that I would have missed out on. Um, so yeah, that's it's okay to have most of your money in sort of safer assets and maybe just explore something on the side. And as you get more comfortable, then you start dedicating more and more money to like some strategy. But yeah, life is way more interesting in the gray area.
yeah. That's a good point. So how are you like generally allocating like new money into your portfolio? What does your strategy look like for that? Are you like actively adding money like all the time?
Yeah, it's a great question. So I'll start off by saying that, to be honest, the amount that I deposit into my portfolio doesn't really make much of a difference anymore. Like, I can't be like, oh, I'm getting paid next week. Like, I can't wait to deposit that into my account. Like, when my account was like $25,000, then yeah, I was like super excited for payday because as soon as I deposited money for my paycheck, like I saw a little bit of a bump. Now, like, I'm up, $15,000 any given day or down $15,000 any given day. So, like, you know, putting a couple thousand like every paycheck, like every 2 weeks, just doesn't excite me anymore. But what I will say is that I'm starting to deposit new money into like new projects where it's a little bit more satisfying to see the direct effect of that money. So, for instance, I'm starting to get into real estate a little bit more. I actually have plans to raise anywhere from like 50 to 100K for the next real estate adventure. And what that's going to be is a few things. One is actually to fix up my current house. I bought this house in November, first time homeowner, which is pretty cool. Um, and I want to fix it up to make it a little bit more rentable because there's a few things that I could fix. I also want to save up for a down payment on a new property, so that 50 to 100K is going to go towards that as well. And then lastly, I would like to refinance this current property with somewhat of like a second down payment so that the remaining monthly payments won't be as much, so that it's higher chance that it'll cash flow in the future. So I'm kind of saving up for like 50 to 100K, maybe like 80K is going to be a sweet spot. So a lot of my new money is going to that, to be honest. And then the other thing too is that I'm actually using margin right now because crypto, I'm not sure if you're aware, but like a lot of the coins dropped like 40 to 60%, maybe even more in this past like maybe quarter. And so like just to ease up that margin burden a little bit, I've been depositing a lot of money into it, and I'm also getting a bonus coming in from work. I think that might be like in the 5-figure bonus range, so like that'll go straight to my portfolio probably. But that's only because like right now I'm a little bit desperate for cash because I'm using margin, which I don't always like to use margin, but sometimes like the deal is just too good. So yeah.
Okay, interesting. What do you like generally use margin for, I guess? Like what type of strategy, if that makes sense?
Yeah, for sure. So I mean, I try not to use it all the time, but basically like so on Robinhood, I think like the margin interest rate is like 2% or something like that. And on M1 Finance, I think it might be 2% or maybe less than that. I'm not sure. But point is like you don't really feel the interest rate. So really is like free money a lot of the times. And I need to pick my words kind of carefully here because I'm sure there's people that are shaking their heads right now at what I'm saying.
Yeah, I don't think he's like directly trying to encourage anyone to do this. He's just explaining what he's doing.
Exactly. Yeah. Um, but yeah, I mean, like if the opportunity, I mean, it really has to do with like risk, which is
Yeah,
when are stocks less risky? Stocks are less risky during drawdowns, like when they're down. And like if they're down and you need margins for like a couple things, maybe you need a margin for like, selling a put option or something. Like when stocks are down, like I think that's fine. Um, Also, like if you don't have as much cash as you would like to buy a particular dip, then like I think it's fine to use margin, honestly. And so like the reason why I think the risk is okay is because like I would only I would only use margin in situations where if I was going to get a margin call, like we'd have to be in World War III. Like it's almost like sure, like if I spend like a little bit too much on margin, the only way that I'd get margin called is if the market lost like another like 30% or something. But like at that point, like things would have to get really, really bad, which is like a kind of I wouldn't say like an impossible event, but um like a statistically less likely event. And I'm not saying like any 30% drawdown. I'm saying like after the market's already dropped a ton, then you can kind of use margin. And then the more stocks drop, in my opinion, then the less risk there is. And if anything, when stocks drop more, then the risk is actually to the upside, not the downside. So that's kind of how I think about margin.
and how does that work on Robinhood? Like you mentioned put options. Like I know on other platforms, like you don't really, you're not even really using margin in the sense that you're going to pay interest unless you get
Right.
assigned. So
That's
do
right.
you like pay interest on if you're just doing like a put, selling a put?
No,
Okay,
if you're not assigned, yeah, it's not considered margin. Yeah.
yeah, you're just like increasing your buying power, I guess.
Yeah.
Okay, that makes sense.
Yeah.
Yeah. So I guess you've said you mostly use like technical analysis for your investing and um, mostly like following the trends.
hmm
So, like, are you, I guess, like, how does your process for that work? Or do you look more at the overall markets or individual stocks or kind of both?
Sure. I'll start off by saying that I've been, studying technical analysis for, the last like since I started investing, maybe even a little bit earlier. And like most things that people make careers out of, it takes time to get to a point where you feel comfortable and things kind of start making sense. I think the funny thing with trading versus other careers is that like it's accepted that you go to school for biology. Sorry, you go to school for 4 years to study biology to become a biologist, but people think you can pick up trading in 2 weeks by watching a couple YouTube videos, and then they lose money, and then they say technical analysis doesn't work, and then they quit. And I fully acknowledge, like, I don't lack self-awareness. I realize that um, technical analysis kind of looked down upon as this thing that doesn't really, it's not really real. Like people would compare it to horoscopes, for instance. They'll say like, oh, I'm looking at this, this flying saucer kitten rainbow pattern or something, like therefore it's going to zigzag. Like that, these are the kind of jokes that people make when they're trying to knock down technical analysis. And technical analysis to me is basically understanding human psychology and human sentiment at scale, where we would look for certain emotions to inform our trades. And the reason why that makes sense is because investors are emotional. And not only are investors emotional, but investors are human. And the types of feelings that humans get when they're investing, when the market's at a top or at a bottom or somewhere in the middle, like there's going to be repeatable patterns and trends and things to watch out for. And so that's, in my opinion, why technical analysis works. And so there's different like tools at your disposal, like different indicators that you could use, but it's really all about putting together a story. And people might also say like, oh, this indicator doesn't work. And it's like, it depends on what you mean by work, because an indicator is basically just a filter of information. And, just because that information does not guarantee something doesn't mean it's useless. So like when I'm trading, I try to find high probability trades, high probability setups with minimal downside risk. Like that's basically all it is. And my process is basically, well, first I needed to identify like what it is I'm good at and what I like trading. Because I talked about the how. Now let's talk about the what. Like, what do I actually buy? So there's a bit of a story here. So when I first started trading, I actually looked at commodities like crude oil and gold. And these were actually the more popular commodities to trade at the time. This was like back in maybe 2017. There was like other energy commodities like natural gas and other like precious metals commodities like silver. But like this is kind of what I would look at. I don't know why I got started looking into that, but I did. But anyway, over time, what happened was I would trade these like semi-volatile assets where uptrends took a long time to form, or like sometimes it wasn't even clear if it was in an uptrend or not. And I would watch as this other thing, this magical thing called the NASDAQ, would be in like a steady uptrend. And like, sure, there'd be downtrends every now and then, but like the drawdowns wouldn't last long. At least you had the support that like, even if I bought a little bit too high, or if I bought a little bit too early on the NASDAQ, like there's some, I guess, like unspoken feeling of agreement that like it's going to go back up and you're eventually going to break even. And that feeling is basically investor demand, high investor demand, and lots of institutional support. And that's something that other commodities don't have. And so, yeah, so then like I was like, why am I should probably just keep it simple, right? Because again, I started thinking like, if Google drops 10% like in a month, which is, that could happen, right? Like we saw what happened to Facebook over the past few weeks. Like these large cap tech stocks can suffer drawdowns, but over time, like they're likely going to recover. And then if you watch as like Google drops 10%, it's going to need like more than 10% to get back to its all-time highs. And it's like, why don't I just buy this thing? Like it could take 15%. Like it could go up 15% very easily after it drops 10%. So it's like, why don't I just buy this thing? And so then I started looking at large cap tech stocks, which the fascinating thing about large cap stocks in general versus indices is that like they're all somewhat correlated, but of course there's going to be some small differences. Like, if the entire NASDAQ corrects, sure, it's likely that Facebook and Google are both down, but they may be down different amounts and they may recover different amounts. So like you have these small discrepancies. So like they start to become your playground of like, which stocks to buy. So yeah, basically just started looking at large cap tech stocks and major indices, and then that basically gave me like the safety I needed to grow my account. And again, I mentioned like capital preservation is super important. Um, so then that started, yeah, basically answered the question of what. So now we answered the how, we answered the what. Now it's like when. Like when do you actually buy something? So um, I mentioned earlier that in my opinion, there's two ways to make money in technical analysis, or two main ways. The first is mean reversion, and the second is trend following. So I kind of talked about trend following already with crypto, and it works beautifully with crypto, in my opinion. I can't wait to see where my account is in a couple of years, because I just created this trend following strategy for Bitcoin. But mean reversion is actually what I started to do with the overall market, because like the Nasdaq, for instance, is so much more competitive than Bitcoin. Like, and the reason why I think so is because like there's so much more retail investors in cryptocurrency, and it's not that like heavily exploited yet as this like blue chip asset. In the same way that like the Nasdaq and other large cap tech stocks is like there's so many eyes on the Nasdaq, so it's like so hard to it's so difficult to time the market, or even come up with like a good trading strategy. So with the Nasdaq, I basically or with the overall stock market, I do mean reversion. So like, what does that mean? That means that stocks are eventually going to revert to their means at some point. And so like the points we'd have to watch out for is like when stocks are extremely overbought or like extremely oversold. And now it's like, how do I determine if a stock is extremely overbought or extremely oversold? Um, because a lot of people say buy low, sell high, but it's like, what does that even mean? Like, what does low even mean? What does high even mean? Like, you have to define this in some way. And so, like, what I would look out for is for when large cap stocks are very overbought. That's like good times to get in. And then when stocks are very oversold, that'd be a good time to get out. And of course, this makes intuitive sense because this is playing off of the emotions of investors, which is fear and greed. Because like near market tops, you're going to see the most amount of greed. These are good times to start taking off some profits. And then during extreme bottoms, you'll see extreme fear. This is a good time to be a lot more aggressive with buying stocks. And another point I want to say is that like I'd much rather buy and be cash than short anything. Like shorting is so difficult because like shorting the stock market, for instance, like it doesn't work that well. At least in my experience, it doesn't work that well, especially because the stock market is more in an uptrend than it is in downtrend. So like you really have to be lucky there. So I would not short the U.S. stock market, and then just shorting anything in general. Like it's so like you're going to pay interest on the amount that you short. Like your your downside is like unlimited basically. Like you can get margin called a lot easier. Like I would never short, but yeah, just buy stuff when it's oversold, take profits when it's overbought. And that's basically the strategy. I know that was like a lot, but yeah, let me know if there's anything I can explain better.
Yeah, I think it's sort of interesting to use. You talked about like the trend following strategy with crypto and like the looking towards mean reversion with your regular, with like general stocks or indices, because to me that's sort of like those seem like the opposite in a sense.
It
Um,
is. Yeah, that's a great observation. Yeah, I'll just answer that really briefly because like trend following is so naive. It's not making any assumptions about where the market's going
yeah,
to go. It's just let Jesus take the wheel. You know what I mean? We'll see how much money I can make here. So it's very naive, but sometimes simple strategies work. And then on the other hand, mean reversion is much more about timing. So it's a lot more difficult, but it's pretty rewarding if you get it right.
yeah, that makes sense. It's just yeah, that's interesting that you kind of use both of those. But um, yeah, so you actually we had a few questions here. Dan was asking if you had any thoughts about inflation, what you think is going to happen there. I don't know if you are sort of into that side of things or kind of pay attention to that stuff much, but
Yeah, I usually don't pay attention to much economic data or fundamentals, which is kind of hilarious because I'm in the like the 2% of people that don't. Whereas I think when most people talk about stocks or the stock market, they always lead with economic data and company fundamentals. But on inflation in particular, I realized just how nasty it's been the past couple years, or even starting in like maybe late 2019. How brutal it's been for the working class. But I do feel like I don't think it's going to be at this rate forever. Like even high periods of inflation don't go on forever. And what we're starting to see is like supply issues are starting to get a little bit better. Like ports are starting to get a little bit less crowded. We're starting to see more goods flow in and out of countries, and so like a lot of the inflationary pressures are starting to subside a little bit. But yeah, I don't know. That's my optimistic take. I don't think it's going to continue at this rate forever, but it certainly is something to have to watch out for. And it sucks. Like it really sucks. How crazy it's been. Like rents, for instance, have like some rents in some neighborhoods have increased by like double in like the past 10 years, and like wages have not kept up with that, and traditionally wages have not kept up with productivity. So like yeah, it really sucks the effect that it has on the working class and folks that don't own appreciating assets like stocks or like businesses. Yeah, I mean, I don't want to sound too pessimistic, but it's like, what else do you have going for you if you're not putting your money in assets that appreciate over time? So that's why financial education is honestly so important.
Yeah, for sure. And he also asked about Facebook, if you bought Facebook recently or are
Oh,
involved in that at all.
well, yeah, I would have been. And that's a good question. I would have been. I've been spending so much time thinking about crypto lately that like I've stopped paying attention to, or I stopped like making too many trades with the overall stock market and tech stocks, which is what I used to do. Like, yeah, I'm sure it's a good trade. I just haven't been paying attention to it too much.
Okay, that makes sense. Yeah. So I guess like, do you want to talk about your YouTube channel at all? Like, what's your like? You seem a lot of the times not like super consistent with it, and you're just kind of like sometimes you'll post like a few videos at a time, like within a few days, and then do you
Yeah,
just is it just like not something super high priority for you?
that's definitely putting it lightly. Yeah, no, I'm gonna get back to it this year. I think what happened is after I moved into my new place in November, I don't know, I just wasn't in like the same mindset I was before. It's just like you're moving in and out, and it's like you're in a
Yeah.
new city and stuff. And I honestly I wasn't that good of a mental headspace to begin with when I bought this place.
Mm.
So like I kind of stopped because of that. And then what else was I gonna say? Oh yeah, and then I just started spending a lot more time investing, actually, yeah, investing in crypto. And then like as I was coming up with these strategies, like that's all I wanted to talk about. Like that's all I was thinking about. And like I didn't really want to share the strategies I was coming up with. Like as selfish as that sounds, like I don't even have that many subscribers, but it was just like why would I just give this away for free? Not that I care if like people use it or something. It's just like I don't know. It's just like it's my thing, you know.
Yeah.
So that's kind of the other thing. And the last thing I'll say is that like I started looking at my channel and I was like, a lot of my videos can be interesting, but like I don't think they're very like helpful for people. Like the only people that get use out of it are people that like already know what I'm talking about. And they don't need my videos to like learn more, most of the time. And so a lot of my audience probably doesn't know much of what I'm talking about, and they may, follow some of the trades I'm doing, and like it may not work out too well for them. Like I remember I was talking a lot about hyper growth stocks, and then I got stopped out on a lot of them. But I'm sure there's people that have that are still bag holding some of the same stocks that I was buying, just because I'm not going to make a video every time I buy and sell something.
Yeah.
Um, so like in that sense, I was like, okay, literally, what kind of channel do I want to be? And so when I come back, I'm actually going to make more practical long-term investing videos and kind of steer away from a lot of the really like into the weeds technical analysis stuff I used to make. And yeah, just make something that can honestly help people. Like, I don't want to keep being like ashamed of the content I make, I guess.
Yeah, that makes sense. I definitely sort of understand what you're saying with like trying to uh, provide something that's like directly helpful as opposed to just kind of like talking. And you can definitely like it's definitely easy to make videos that are sort of interesting or uh, like a good subject, but uh, that's sort of for me. It's like I try to in general make stuff that like is either sort of directly talking about like specific stocks and like um, trying to give something out that's like a little bit educational or helpful, or like the other side of it is just kind of like showing what you're doing, which sometimes it's like not that helpful, I think, but at the same time it can just at least for me, I think it puts things into can put things into the perspective for other people and just give them like a different perspective to look at, which is sort of why I'm like doing these live streams just to talk about like different people's ideas, as opposed to just like talking about mine all the time.
Definitely. Yeah, there's a lot of ways that like sharing what you're trading can backfire. I feel like there's more ways it can go wrong than like ways it can go right. So unless you're just buying like blue chips, like I know you had investing sensei last episode, which is like, yeah, I think that's great if you're sharing just buying blue chips. Like, I think that's the exact type of video you want to make, so you can share like what it is to invest in the right way. The problem is most people usually want something more exciting, but if you share the more exciting stuff, like obviously comes with more risk, and most people don't know how to manage that risk. They'll be like, "Oh, this person said he bought, Fastly, you know, not knowing that I probably spent like 2 grand on Fastly, which, that's like that's less than 1% of my portfolio. Um, some people may go in like 30% or something, and then they don't know when to sell. And again, I'm not going to
Yeah,
make a video about when to sell, especially whether things go right or whether things go well. Knowing when to sell is like just as important. Um, so yeah, it's like, it's kind of, there's more risk, there's more downsides than upsides. And then of course the upside is all like, it's mostly for selfish reasons. Like, I could make videos that have the keywords that people want. Like, I noticed that whenever I have like HYLN, like Hylian in my videos, like I know it's gonna be like near the top of like what I usually get for my views, um, because that's what people want to see, and that's what people are driven to, because they like speculative stuff. Like, speculative stuff is very sticky, but that's not
yeah,
helpful for a lot of people.
yeah. And
It's
sort of
like,
like what you were saying. Yeah, go
oh,
ahead.
I was to say, it's like buying a McDonald's for your kid. Your kid's always going to want McDonald's, but like, is that the best thing for them? I don't know.
Yeah, kind of like what you were saying. Just talking about like I guess like the experience you have, and sort of you've put a lot of like time and effort into like learning this kind of stuff, and most people probably like aren't really there, or most people who are at least like going to be watching those videos and like trying to like replicate that, if they had that experience they wouldn't need to like watch that video to like figure that out. They would have already done it essentially.
Yeah,
So
that's exactly my point. And the thing with technical analysis, it's not straightforward at all. Like, there isn't this, step one, learn this, step two, learn this, and then by step
yeah,
10, you'll be a technical analysis master. Like, it's really not about that. And the one critique that people have of technical analysis is that two people could be looking at the same chart and draw different conclusions. And so to them, it's like, therefore, technical analysis is, made off of flimsy evidence. But when you start to like look at the technical analysis that people that are really good and are actually making money off of it, it's like worlds different than like what other people do with it. So that's the other thing, is like, for a lot of newbies, they're gonna have to understand how to filter the right like information. But if you don't know anything about it, then how do you know what's real and what's not? So it's very, I hate to say it, but like it's very vague, and that's why it doesn't work for a lot of people.
Yeah, I definitely haven't been trying to like trade directly per se, but um, I have like done some like uh, option selling generally. So I try to
Nice.
at least like look at a basic chart and like sort of get an understanding of that. And I guess my sort of takeaway from like trying to learn a little bit of it is that it's really not like a science or anything super concrete, and you just kind of have to like take in a lot of different pieces of like data and information like surrounding like a particular scenario, and then you can kind of come up with like a big picture, I guess, view of like what you think is going to happen. And like you said, like different people could come up with different conclusions about that, and that's kind of like the difficult part about it, right? Because it's not like a right or a wrong answer.
Totally. Yeah. And then the other part that people don't like is that, again, it's not in absolutes. And like we were just talking about this, which is like all the interesting stuff lives in the gray area. And when you're making a trade, you're not saying, hey, this is for sure going to happen. You're saying this is more likely to happen than the other thing because of X, Y, and Z. And a lot
Yeah.
of people just hate thinking in those terms, which like it takes like a certain kind of mindset to acknowledge like uncertainty and being okay with uncertainty.
Yeah. It's interesting stuff, but you certainly have a better grasp on it than me. But again, like you just said, you've done a lot more like research into it and looked at
For
it a
sure.
lot more, so it makes sense.
Hmm.
Um, so I guess is there anything else you want to talk about? I guess with investing or any other topics you want to that are interesting to you?
Yeah, that's a good question. I think something I didn't talk about earlier or like expand on earlier, you kind of asked like, why I started investing or like kind of my background in like investing. And I think I kind of led it with, um, not wanting to do the things I don't want to do and wanting to do more of the things I do want to do. But I think um, investing is like so addicting, which is probably what a lot of people in this chat can relate to. A lot of people watching this video. Um, and yeah, I just want to say like I eventually do want to grow the account to be like as big as possible. And yeah, hopefully I can hit the 1 million mark, maybe in the next year or so, and then like we'll see what happens after that. And I think what's going to be really cool about it is because like most of my gains have not been through deposits, so um, like where like for a lot of people, if a lot of their portfolio value is because of the money they've deposited, they're going to start to see like a bit of a slowdown once their account gets larger. But since mine doesn't depend on deposits, like I think once I hit that like ceiling of 1 million, like it's going to go relatively quickly. And there'll be like $100,000 up days and $100,000 down days and like stuff like that. And yeah, no, I'm super excited about it. And yeah, something I'm happy about.
Awesome. Well, I think that's all I had to talk about. Pretty much answered everything or like covered all the topics. I guess we didn't really talk about like how often you invest or like how you do that, but it sounds like it's since you're more sort of like into, I guess, the trading side of things, it's just dependent on like whenever you see something, right?
For sure. Yeah. Have you picked up any like cool investing tidbits from doing these interviews that you hadn't before?
Um, Not like particularly. I think one of the things I was talking about with Investing Sensei last week was like um, he was saying basically like whenever he gets a dividend, he like reinvests that same dividend like back into the company, and then he like buys more of it, like regardless of like valuation or whatever, which is something like I've been sort of trying to do something similar, just because I'll get companies that in my portfolio that I haven't sort of like bought more of for like a year, like just like dividend stocks, and I sort of just like want to keep adding to those, but I just haven't seen like, for example, maybe a good opportunity to do that in the past year. So now those positions will like be just smaller if I don't do anything. So I think sometimes at least just adding a little bit over time, even if it's not like the best price, especially with like dividend stocks, where it's not like you're not generally going to see like huge ups and downs like frequently. So I guess like some of the opportunities there aren't going to happen as frequent.
For sure. Yeah. I mean, the stuff that gets me excited about dividends is not so much like, oh, it dropped 10% or 15%. It's like, oh, it's historically this dividend is generally like 2.2%, but this month it's 2.8%.
Yeah.
And I remember like coming off the pandemic, um, like the stocks that recovered the hardest after March 2020, like between March to May, were like tech stocks. But then you also had laggards in some sectors like real estate and energy and financial stocks that took a little bit longer to recover. And like you had some really good real estate stocks like Dividend Kings that were giving like 5%. Like I remember like ticker symbol FRT, ticker symbol ESS, ticker symbol O. Like they're in like the 4 to 5% range, maybe even like 6 at the bottom. And it's like, they're Dividend Kings or aristocrats, and they're paying that amount. So like that was actually really cool, seeing the laggards being able, because you had a little bit more time to actually get into those. But now it feels like every single sector is recovered, and the opportunities aren't really there unless you look at like individual stocks. Like I remember I made a video on McCormick, like maybe in the third to last video or something. So I was just buying McCormick, which is at least an aristocrat. Um, but like they've already bounced like 15% or something from their lows. So they're still exciting, if you just look at them the right way.
Yeah. And Investing Sensei actually asked about like, I guess like what would you recommend for someone that wants to get better at technical analysis? So I guess that's like from a beginner, like what kind of resources I guess would you look at, or like where would you start really? Which is something I'm sort of interested in too. So
Sure. Yeah. I mean, now that I feel like I have a much better grasp on it, YouTubers that I respect and have learned a lot from right now are there's one, his name is K Kim. So it's KAY space KIM. So K Kim's pretty good. And then the guy who got me into technical analysis, I would watch his videos every single weekday, like after work. His name is Charting Man Dan. And I think the first word charting and then second word man Dan. Um, I think those two are the main ones. I'd probably start with Charting Man Dan's first. What I did with his videos is I would see what the market did and then try to almost predict what he would say in his videos. And then at some point we would say the same thing, like, oh, this market's in an uptrend because X, Y, and Z. Or like, oh, this market's been in a downtrend for a while. Look for a balance because of X, Y, and Z. And then once like I started to think like he did, then I like started to do my own thing. But those two are probably the ones that I would start with. Again, it's kind of difficult because like for a lot of newbies, they could be kind of boring, especially if that's not what you want to be doing. Which it's okay if it's not for everyone. Um, but yeah, I'd probably start with those two.
all right, awesome, thanks. So yeah, I think that's about it. You have a YouTube channel. Hopefully you'll post some more videos, but everyone can definitely still go subscribe. And I don't think do you have a Twitter or anything like that?
I do, but I stopped using Twitter, so it's not
Oh,
worth it.
okay. Okay. And I think you have an Instagram too, so people can follow you there.
Yep.
And yeah, thanks for coming on. I really enjoyed it. Definitely like probably a little different than a lot of the people that I'll probably have on at some points. But I think there's definitely a lot to be learned here, and I think you definitely have like a lot of knowledge that is just super interesting to hear about. So I appreciate it for sure, and hopefully I will have another stream either next week or the week after. I'm not quite sure yet, but
Cool.
thanks for coming on, everyone, and we'll see you later.